Hello learners. So I am here again to discuss some important economics concept and welcome to my channel Learning Economics. So student, yesterday we had done production method. We had started with production method and we had discussed two methods also. Like we had started with value added method. Okay, so first we will recapitulate what we have learned and then we'll again come over to new methods. So I'm just sharing screen for you. Please see this screen and you will come to know that what has been taught yesterday and what we are going to do today. Okay, so first thing is that we want to start with the different type of methods, and the first method is production method, and then income method, and then expenditure method. So we had done all these topics, NFIA and gross and net, and this is methods of calculating national income: production method, income method, and expenditure method. Okay, so we had started with production method and I had told you the steps. Like for value added method, we want to find net value added at factor cost. For that, what we do, we have total output, and from total output, we deduct intermediate consumption. And when we deduct intermediate consumption, we get gross value added at market price. What is the difference between market price and factor cost? Market price is the price at which the thing is sold, and factor cost is the cost at which the thing is produced. Means actual production cost is factor cost, and the value of thing in market is known as market price. So market price also includes net indirect taxes. Factor cost does not include. Now you can see that we have then second step is that from GVAMP, what we do is we deduct depreciation, and when we deduct depreciation, we get net value added at market price. We get net value added at market price. And then third step, what we do, we deduct net indirect taxes and then we get NVAFC. So I'd also told you that we can see the whole formula at a glance also. And how can we see? Like for a whole formula, you can see that this is the numerical related to which we had already discussed. We had already discussed, and I had shared the notes also in the description section. So whenever you see the description section, you will get the notes related to the video. And if you have any problem, you can share that problem in the comment box so that I can answer your queries and I can clear your doubts. So, so here you can see that NVAFC is equal to total output TO, intermediate consumption IC, depreciation DEP I have written, and net indirect taxes. You can see that. Now we have to find GVAMP and NVAFC. What is GVAMP? Gross value added at market price. And what is NVAFC? Net value added at factor cost. I hope that you have already done these things. So here we have given in rupees crores. So total output is equal to 2500, intermediate consumption is equal to 1200, and depreciation is equal to 300, and net indirect taxes is equal to 50. And you can see that we are finding NVAFC, and the formula is written in a single statement: total output minus intermediate consumption minus depreciation minus net indirect taxes. So step by step we'll go on and we'll do the calculation. Like we have taken total output as 2500, I have taken intermediate consumption as 1200, I have taken depreciation as 300, and I have taken net indirect taxes as 50, and the total value was 950. And when we have to calculate NVAFC, there are two methods. See, first thing what we can do, we can just deduct total output minus intermediate consumption and we'll get GVAMP. This is also a method, because in the previous slide I had shown you the steps, and in this step I had told you that when we deduct total output minus intermediate consumption, it is GVAMP. Or we can go otherwise also from bottom to top, like we can add NVAFC. When we will add NVAFC plus depreciation, we'll get GVAFC because net will be changed into gross. And when we'll add net indirect taxes, we'll get NVAMP. Okay, so GVAMP. So GVA net change to gross by depreciation, and FC change into MP by net indirect taxes, by adding net indirect taxes. And we have done this and we have got the answer 1300. So if you see that if we are doing like total output minus intermediate consumption only, so you will take 2500 minus 1200. Then again you are getting 1300. I hope that you have understood this. So these are the various steps: total output minus intermediate consumption, GVAMP, total output minus intermediate consumption minus depreciation is equal to NNPMP, and total output minus intermediate consumption minus depreciation minus net indirect tax, you get NVAFC. So this is the net value added method which you should know. And then we had discussed this one also. Like if there are 3 firms in the economy and find value added by each firm, and domestic income also, domestic income is NVFC only, and DPFC or NVFC is the same thing. So here we are seeing that sales, we have to do sales minus purchases. So I had told you the formula. The formula is only sales minus purchases. And if there is change in stock also, it is given change in stock, then we do sales plus change in stock minus purchases, which we will discuss in next numerical. So what happens is sale of A to government is equal to 1300. Sale of A to B is 300. So first we'll find all these sales. Now sales of A are 1300, 300 and 900, and purchases are 700. So whatever we are importing is purchase. Whatever we are exporting is sale. Only the difference is that when we are exporting, we are selling abroad. When we are importing, we are purchasing from abroad. Okay. So what we have done, we have added all the sales and then purchases. And then we have got 1800. In the second way, we have got 1600 plus 400 minus 300, and we have got 1700. And then value added by C, 600, only 600 sale is there. And then we have deducted the purchases. So we have got minus 1500. So see, if you, because the question is that if there are only 3 firms, so if there are only 3 firms in the economy, A, B, and C. So we have added the value added by 3 firms. 3 firms, the value added is 1800, 1700 and minus 1500. And when we have added this, we have got 2000. So this we have done yesterday. So now we'll discuss like if we have to calculate NNPFC. Okay. So I had told you that NVAFC is actually NDPFC. That is NVAFC is domestic income. And if we add net factor income from abroad, then it becomes NNPFC. Domestic income becomes national income if we add net factor income from abroad. I hope that you have understood this. So now you can see that total output of all sectors is given 2500. Intermediate consumption by all sectors is given 1200. Depreciation is 300. Indirect taxes 130. And subsidies 80. And net factor income from abroad, NFIA, net factor income from abroad is 120. So what we have done in NDPFC, we have taken the same formula: total output 1, minus intermediate consumption 2, minus depreciation 3, and minus net indirect tax. For finding net indirect tax, we deduct subsidy from indirect tax. So subsidy is 5th, and this is indirect tax 4th. So we have done this. So total output minus intermediate consumption minus depreciation, and net indirect tax is calculated by indirect tax minus subsidy. Now you can see we have taken in the same manner 2500, 1200 minus 300 minus 50, and we have got the answer 950. Now this NVAFC, this is NVAFC and this is also NDPFC. So we have used the formula of NVAFC and we have found NDPFC. So NNP, for finding NNPFC, what we do? We just add net factor income from abroad. And how do we add net factor income from abroad? Like in DPFC, we have taken 950 and NFIA is given 120. We have added, and now we have got national income. So this is domestic income and this is national income. So students, I hope that you have understood this. If we have to find net value added at market price, this is the third numerical. I'll be sharing these in description section also, and if you have any doubt, you can ask in comment section. See, output sold, whatever output is sold in units, it is given. It is given in units. These are the units. 800 units have been sold, and price per unit is given 20. This type of numerical can also come in 3 marks. Output sold is 800, price per unit of output is 20. Okay, so excise duty, this is indirect tax. Again, import duty, this is also indirect tax, 400. Net change in stock is given minus 500. Depreciation is given 1000, and intermediate consumption is given 800. So how will we find total output? First, we have to find total output. Total output is unit sold into price per unit plus change in stock. Because I had told you earlier, the total output is equal to sales plus change in stock. So 800 into 20. 800 into 20 is 16,000 plus change in stock. Change in stock is minus 500. So we have added 16,000 minus 500. Okay. And then indirect taxes is given. Because indirect taxes, what we can take excise duty, we can take import duty also, and 1600 plus 400, it is 2000. If we have to find NVAMP, then what we have to do? We have to take total output minus intermediate consumption minus depreciation. We don't have to deduct net indirect taxes because we are not calculating FC, we are calculating MP. We are not calculating factor cost, we are calculating market price. So for that, I have done total output is 16,000. We had calculated here. Then we have taken total output minus change in stock, because we have to change in stock. We have to add minus, this is intermediate consumption, 8,000, and then minus depreciation. So we have taken this, and our answer is 6,500. I hope that you have understood these numericals. You can see them again and again also. If you want to see them again and again, you can see them again and again, so that you can easily understand what I wanted to make you understand. Okay. So today we have done production method, and in production method we have to calculate NVAFC. We calculate NVAFC production wise also, that how much production has been done, and we also calculate NVAFC in manner of firms, like what selling they are doing. So only the difference is total output. In production method, we take total output, it is given directly, and for firms it is given in form of sales. So we take sales plus change in stock. Okay, that is total output. And in production units, we take intermediate consumption as whatever raw material has been purchased, whatever machines have been purchased, whatever expenses have been made during production. But in sales, for sales, we take purchases, and imports will be taken as purchases, and exports will be taken as sales. So please go through the notes, and in the second video, I'll be discussing the third method of production method, in which we divide the whole country, whole economy in 3 sectors, and then we find the formula almost remains the same. Only the numerical goes on expanding. So students, I hope that you have understood this. So see my second video, because I am uploading first video at 3 o'clock and second video at 5 o'clock. And I am also making efforts so that I will be able to solve all the problems. If you have any problem, you can write in the comment section, or you can send me message if you have my number, or you can send message to my email also. I will open my email and I will see it. So I hope that you have understood these 3 numericals which I have discussed with you. Thanks a lot. Subscribe my channel to keep getting such videos, because I'll be sharing 2 videos every day, and I'll try to take the complicated topics first, and then we'll go over to the next topic. So students, I hope that you have understood this. And if you have any doubt, and if you have any problem of language also, like if you want me to explain in Hindi, you can write in the comment section so that I'll be explaining that particular part in the Hindi. And you can also send me the questions which you feel that you are not getting the answers and you are unable to solve. So thanks a lot. Subscribe my channel for getting the notifications. Thanks a lot.